Hello and welcome to this video. Today we are going to look at the Finviz option screener settings and a quick preview as to what we will be covering today. So we will look at the first of all, we will look at the concept that options trading is nothing trading that where you buy and sell options, but that is dependent on the underlying stock. So we'll see the correlation between the underlying stock and the option pricing. Then we will look at three of the trading or investment strategies, and then we will also see how we can use the Finviz platform. What are the screener settings that you can use to identify suitable options that you can basically trade for each of the three strategies that we discuss above. So without further ado, let's get started. And before we proceed, a quick look at the disclaimer, which basically states that whatever information I'm sharing with you is only for entertainment purposes. It is not any kind of trading or investment advice. If you plan to execute any trades or invest your money, I would recommend that you understand the risks involved and also consult a professional advisor who can actually give you more information on your trading and investment decisions. So first of all, let's understand the concept of the option price movement. So what I mean here is that the options are nothing but instruments which are based on the price of the underlying stock. So if we consider that I want to trade Apple options, that doesn't mean that the Apple options have their own pricing. It is connected to the price of the Apple stock itself. So we have two types of options. As you know, there are call options and put options. When we look at the stock price, if the stock price goes up, then the price of the call option falls in suit. So if the stock price goes up, the call option increases in value. If the price of the stock falls down, the call option decreases in value. Same way, the put options is it does the opposite to what the stock price does. If the stock price goes up, then the put option loses value, and if the stock price goes down, then the put option actually gains value. So all I'm trying to establish here is put across the concept that options are not priced in isolation. Their pricing is connected to the price of the underlying stock. So when we talk about options trading, we are indirectly trading the stocks only, because let's say you want to buy a call option, right? The only way you can make money is if the price of the stock goes up. The option price is not going to independently go up unless the price of the underlying goes up. So essentially what you are looking for is a strategy where the price of the underlying stock is going to go up, and then it is your decision whether you want to buy the stock outright and gain from that, or whether you want to buy the options on that stock and make a gain from that. Same holds true for all other kinds of strategies, whether you are looking for simple option strategies like buying and selling calls and puts, or advanced strategies like iron condors or other things where you expect stock price to stay within a channel or outside a channel. So in all these cases, whether option strategies will make you money or not is totally dependent on whether the underlying stock does what it needs to do or not. So that's the concept that I want to drive across, that when we talk about options trading is not isolated. It is not something which is not connected to the underlying stock in any way. More or less every time we are trading a certain price movement on the underlying stock, or we are expecting that the underlying stock will not make a particular price move when we are trading options. So keep that in mind. Options trading is not isolated. When somebody tells you you can get into options trading, it doesn't mean that you do not need to understand how the underlying stock is moving in price. The price action of the underlying stock is the primary factor which will decide the options pricing. So whether you outrightly trade the stock or whether you trade its related options, in both the cases we are essentially looking to understand the price action of the underlying stock. Now, I'll quickly run through three examples trading strategies. I have detailed videos on all three trading strategies that I have put, so I will leave a link in the description to all three, so you can go through all the three strategies in detail if you want to. The first one is trading the short squeeze. Now, trading the short squeeze is basically identifying stocks which have a lot of short interest. So let's say 40% or 50% of the shares of a particular company are shorted. That means they have been borrowed from the brokers and people have taken short positions in those stocks. Now, what happens in this case? When the stock price starts going up, all these short positions start showing a loss. And one problem with shorting of stocks is that you are borrowing these stocks from the broker. So what's going to happen is, soon as the stock price goes up, all those people who have shorted the stocks are going to see a loss on their account, and depending on the balance of their account, the brokers will be forced to issue margin calls, which means that people who have shorted the stocks need to put up additional money to cover their losses. If they are not able to put up the money, then the brokers will start liquidating those positions, and the only way you liquidate a short position is by buying back the stock. So initially, because there was some buying pressure, the price went up. And now, because all these shorts have to cover their positions, they are being forced to cover their positions, the price further increases because of this new buy pressure which has been created because of the shorts buying in order to reduce or minimize their losses, and also because of those cases where brokers are forced to buy back the positions in order to restrict the losses. So that is one of the strategies which is called the short squeeze. You can find more information about this in one of my detailed videos where I have covered extensively how short squeezes work, what parameters are involved in a short squeeze, and how do you basically identify stocks which are applicable for a short squeeze using the Finviz platform. Today, we are going to later see how once we identify stocks for short squeeze, we can use the same Finviz platform to actually trade those stocks which have options associated with them. So I will leave a link in the description of the detailed video where I have discussed the strategy in detail, and you can have a look at that. The second strategy is selling naked puts on stocks trading at a discount. Now, again, this is something that I have covered in ample detail in another video of mine where we look at the Finviz screener settings to identify stocks trading at a discount. And when I say discount, don't mean a valuation based discount. I am not talking about fundamental analysis here. The basic approach here is that for a stock which was trading, let's say at $100, if today it is trading at a $70, while the opinion in the market about that stock by the analysts, by people who are doing a fundamental analysis on the company, that has not changed. So let's say when the stock was trading at $100, the target price was $120. Now, instead of the stock going up, it has come down to 70. So can I say that the stock is trading at a 30% discount from where it was some time back? The answer is yes, because the fundamentals of the company haven't changed. The analyst predictions, the target price said has not changed. So nothing has changed, but for some reason, the stock is now trading at a much lower price. So that's a much better entry point for us. And those are stocks which are essentially trading at a discount in the short term. So what can be done in this strategy is that when the stocks make this downward move and they're available at a relative discount to where they were trading some time back, we can sell put options which can get us a lot of premium. So either two things will happen. One, these put options will expire worthless, so you will end up making a ton of profit by means of the premium that you have collected. Secondly, if the stock price falls further, these put options can get exercised and you will end up owning the stock, but now you own the stock at a very deep discount. So something which was trading at probably $100, it came down to $70, and let's say you sold the $50 puts or the $60 puts, then essentially you're buying 100 shares of that stock at $50 or $60 a share. This is something for which the analysts are targeting it to be, let's say, at 120 bucks, which was trading at $100 some time back, but you are buying it at $50 or $60, which is a big discount. So you can hold on to these positions and then you can start selling covered calls against them to even further lower your cost basis. Again, this is something that I have discussed in detail in one of my other videos, as I mentioned earlier. So I am going to leave a link to that in the description, and you can basically go through that to see the entire approach and the Finviz screener settings in detail. The third one is selling covered calls on dividend stocks. Again, this is something which I have covered in another video of mine where we talk about dividend investing and how we can supercharge that dividend investing by selling covered calls against the shares that you already own. The only thing is that instead of buying 10, 15, 20, 25, 30 shares, you have to buy shares in lots of 100, because when you want to sell covered calls, you need to have at least 100 shares of a stock. So that's the only thing that you need to do and take care of. And as long as you're doing that, you can make an additional income by selling these covered calls, an additional 2 to 3% return every single month without losing anything else. You still get the growth potential in the stock, you still get the dividends, and you get an additional income by selling these covered calls. So again, This is something that I have discussed in detail in one of my other videos. So I am going to leave a link and you can go through that to understand this strategy in detail. So we have seen three example strategies here, and all these three strategies are not related to options trading. These three strategies are related to the underlying stocks on which later we can decide to sell or buy options or execute different types of option strategies. So the first thing is to identify stocks which we want to trade. Now that trading can be through buying and selling of the stocks itself, or it can be through buying and selling of the options related to those stocks. But the first thing is to have your trading strategy in place which can help you identify the stocks in which you can trade. And so I have covered three strategies in brief here, and I'm going to give you links with detailed videos where these strategies along with the settings on the Finviz screener have been explained in detail. So now once we know which stocks we want to trade, we get to three different ways where we can identify where we have good options to trade for these strategies. Now, what do I mean by this? Let's say you come across a company which comes in your screener as a part of the short squeeze. So you're looking at the short squeeze strategy and a symbol pops up. There is a very good chance that that particular company does not have an option chain related to it. So the only way you can trade that company is by either buying shares or selling shares. That means you can either have a long position or a short position in the shares of that company, but that company does not have option chains associated with them. The second thing that can happen is that you may come across one of the results in your screeners. Let's say again we'll consider the short squeeze. So you execute the short squeeze screener and you come up with a list of companies which are in a possible short squeeze, but you pick up one of the symbols. It does have an option chain, but it doesn't have enough liquidity. So again, it is always recommended to trade liquid options. Why? Because you do not want to get stuck with options that you cannot sell off when you want to actually sell them off. And also you don't want to incur too much of slippage charges where the bid ask spread is too wide, and that can happen with illiquid options. So what is, let's say you only want to trade with options, you don't want to trade stocks outrightly, and that's one of the strategies that I follow. I don't buy stocks unless I'm doing the covered call strategy. I don't buy stocks. I basically try to work only with options. So how do we basically identify those stocks? How do we narrow down the universe of the stocks that we get from the three different strategies, example strategies that I mentioned? How do we narrow down further to only those stocks which don't just have the option chains available, but which also have liquid option chains that you can actually trade without incurring too much of slippages and without running into liquidity problems. So the first thing is that we will look at three different ways of doing it, and I'm going to briefly cover this, and then we'll head over to the Finviz actual platform. I'll show you how to actually execute each of these strategies. So the first thing is, usually this is not an exact science, but usually stocks which have really good volume, and I'm not talking about the options, I'm talking about the underlying stock which have really good volume, they also have good volumes on the option chains. So let's consider Apple for example. If you look at Apple, it is the most heavily traded stocks. So if you look at Apple shares and look at the buy and the sell volumes, that is the highest. And if you look at the corresponding options volume, that is also the highest. So the options volume, trading volume, is actually directly proportional in most cases to the trading that happens on the stock itself. So essentially what I'm trying to say here is that if you are looking to trade liquid options, you should look at stocks which have a lot of liquidity. And that is one of the techniques. Now, this is not an exact science. There can be some cases where the option volumes are really good, even though when the trading volume on the stock itself is not that good. But again, it satisfies our purpose. Our target is to find out those stocks which have good option volumes. And as a general rule, you can basically keep in mind that if the underlying stock has good volumes, then the corresponding option volume should also be good. The second way we can do that is that we can filter down, we can create a filter that we will only look at stocks which are part of some major index. So that can be the S&P 500 or it can be the Dow Jones. Usually for a company to become part of an index, it has to be a significant representative of a particular sector. So if the company is actually a representative of a particular sector, then it is a good company, it is a popular company, and it is expected to have an active option chain. So that's the second way we can identify those stocks which have active option chains. And the third thing is that over a period of time, this is what happens with me. I have a watch list of, let's say, the top 200 or top 400 or top 500 most active options, and that is something which gets created over a period of time based on my experience, based on the trades that I have executed in the past, and also based on a lot of other things, like I may be getting a suggested list from some website or somewhere. So I have that list. So let's say I have 200 or 300 ticker symbols available with me, which I know have active stock options. Then I can use that as the base, and within those, that universe of 200, 300, 400 stocks, I can see which of the stocks are in short squeeze, which of the stocks are good for dividend investing, which of the stocks are actually trading at a discount. So I think we have discussed enough in theory. Now we'll head to the actual Finviz platform, and we'll see each of these things in practice and see how we can narrow down to the stocks which are not just satisfying some of the conditions, but also where the options volume is significantly high for us to trade, and we will not run into any liquidity issues. So we are on the Finviz platform right now, and I'll leave a link to the platform uh, in the description for new viewers. And now let's quickly understand practically how we basically figure out the stocks which are having option chains. We basically want to pick up stocks which have options, and secondly, those options should have high liquidity so that we can trade them. So first of all, I'll go to the screener, and I showed three example strategies, and you can use any of the strategies, any of those three strategies, or you can use your own strategy, it doesn't matter. But the basic idea of identifying the options, active options for those, any of those strategies, is going to be the same. So here I'm going to use the first one, which is basically identifying stocks on sale. So I have a detailed video on how to set up the screener for identifying stocks on sale, and that is again not by valuation. It is based on that the price of the stock has taken a recent dip. So let me quickly set up that screener. So in that particular screener, basically what I do is I look for stocks which have uh, a market cap of above $2 billion, because I don't want to pick up very small companies. Then I'm going to pick up stocks which are uh, only from companies which are headquartered in the United States. And I'm also going to pick up stocks for which the target price is above the current price. That means there's a scope for the stock to go up, and the analyst recommendation is a buy or better. And if you see right now, I have 1,173 stocks being listed here. So there are 1,173 stocks which are satisfying all these conditions. And then I am going to look for a discount. So I want a recent dip in the price. That means I don't want the stocks to be trading at their highs. I want to be seeing a dip. So if you're happy with these settings, fine. Otherwise, there's one more setting which you can do. If you really want to see the stocks which are trading low, you can actually go to the setting and select stocks which are basically near their lows. So now we're looking at these 38 stocks. So what has happened to these stocks is they are from companies which have a fairly big market capitalization. So it's not very small companies which can kind of get into bankruptcy and other kind of problems very often. We are on the right side of the analysts. So we are looking at stocks where the analysts have given a buy or a better recommendation, buy or a strong buy recommendation, and for which the target price is still not reached. So there's a scope to reach the target price, and we are looking for stocks which are trading close to their 52 weeks lows. So whatever is the lowest price in the last 52 weeks, these stocks are just barely 0 to 10% above that price. So they're trading pretty close to their lows, and they are oversold on a 14-day RSI, which means that the price has fallen down very recently. In the last 14 days, the price has gone down. So we can quickly take a look at the charts to see that the screener is correctly set up. And I leave a link to the detailed video where I'm discussing this particular screener and the strategy on how to identify these stocks on sale. So you can go through that. But for now, uh, let's look at the candlestick charts here. And you can very quickly see here that if you look at any of these charts which we are seeing here, you can see that these stocks are trading pretty much at their 52-week lows. So right now I have the weekly charts visible here. So you can see that most of these stocks are trading near their lows. And so what basically this doesn't mean that the stocks are going to start trading high. We need to do more analysis. But the basic concept here in this screener is that we are looking for stocks where the analysts still feel that the price is going to go up. They have a buy or a strong buy recommendation, but for some reason these stocks are trading close to the 52-week lows, and they've had a recent fall in price. And that'll be the common trend that you will see in all these charts, that there is a recent fall in price. Look at this, look at this, look at this. And the current price levels will be very close to the 52-week lows. That means the lowest price the stocks have touched in the last year. So let's say I'm going to use this particular strategy. Now, this video is not about discussing the various trading strategies. Those are separate videos for which I will, as I said earlier, I'll leave a link in the description. Here we are basically bent upon just one objective, that from the screener itself, I could get 38 stocks, right? Now, how many of these 38 stocks are actually having active option chains? Because if you're exclusively trying to trade options, it doesn't make sense if you get 38 stocks listed in the results here, but then you realize out of that only 4 stocks had active option chains or had option chains altogether. 34 of those stocks did not have option chains, because as I mentioned earlier, all stocks do not have option chains, and a lot of stocks have option chains but they are not at all liquid, so there's no trading going on there, and we want to stay away from those kind of stocks. So it doesn't make sense for you to have this kind of a filter setup if you're only trading options. So how does Finviz help us in identifying not just the stocks which satisfy my trading strategy, but also out of these I want to further filter stocks which have active option chains. So the first technique that I had mentioned while we were going through the slides was the fact that there is an option actually here on Finviz which says optionable. So as soon as I select optionable, then any companies which do not have options associated with them will get dropped off. So you can see earlier I had 38 results over here. Now as soon as I selected this setting, I am only getting 36 companies. So that means out of the earlier results being displayed, 38 companies were being listed, 2 companies were there which basically did not have option chains. And so now since I have selected this filter, the additional one, so those 2 companies are basically getting dropped. So this is the first step. You basically select optionable here in this option on the screener settings. So this basically makes sure that any companies which do not have any options at all, which do not have an option chain at all, they basically get dropped off. And now your list, definitely all the 36 companies being listed here will have option chains. Now our second objective is to see which of these option chains are actually active and which are not. So we do that in 3 different ways I had discussed earlier. Now let's practically look at how those techniques work. So the first technique is by the volume of the stock trading itself. Now this is a general concept. It is not a scientific rule, but this is what experience teaches you, and this is where the information I'm giving you is coming all with experience, that any stocks which have a high trading volume on the stocks itself, that means when for any company, when there is a huge volume of buying and selling of shares, then the corresponding options also have high volumes. So what essentially I'm trying to say is stocks which have active volumes in the trading of the stock, the shares itself also have active volumes on the options trading. So if you look at the companies which have the highest traded volume, the number one company would be Apple. So number of shares bought and sold are highest for Apple. Now, if you look at the company which has the highest volume on the options trading, that is also Apple. So this basically is what I'm trying to convey. Companies which have high trading volumes on the shares have high trading volumes on the options also. So what we are going to do here in the first strategy is we are going to look for companies, only those companies which are trading more than 1 million shares on a daily basis. So we don't have a direct filter to see how much options open interest or options volume is there on Finviz, but we do have an option to see the average volume of the stocks, and I'm going to select over 1 million. So now out of 36 companies, there are only 18 companies where the the stocks, the shares traded every single day on an average is more than 1 million. And I can assure you that 99% or at least 95% of these companies, if you go and look at their option chains, they will be active option chains. The reason is very simple, because when you have over a million shares of a certain stock being traded, that is a really active stock. People have a lot of interest in that stock. And if it has an option chain available, which we have already selected based on this filter optionable here, then it's very likely that the options also have significant volumes, and at least the strikes which are very close to the current price will have good volumes. So this is one technique. If you want to see even more active option chains, then instead of over 1 million, you can go to over 2 million. The number of stocks will reduce, so now we are getting only 11 stocks here, but these 11 stocks will definitely have much more active option volumes as compared to the 36 stocks that got listed earlier. So you see, we're following a step-by-step process. Initially, we just used our filter for the strategy and we got 38 stocks listed. Then we took off two stocks which did not have option chains at all based on the optionable filter, and we landed up with 36 stocks. Now, out of those 36 stocks, we are further dropping stocks which are so we're selecting stocks which are satisfying criteria for our trading strategy, but at the same time we are dropping stocks which have lower volumes, so that if we try and basically execute trades on the options of these stocks, then they will have significant volumes. And for those of you who are trading options, you will realize that all of these stocks are actually pretty active in terms of the option volumes. And so the first technique is this, that you basically select the stocks which have really high average daily volume. And the basic correlation here is that stocks which have a high volume of trading on for the shares itself tend to have a high options trading volume as well, or active option chains as well. So that's the first technique. The second technique, let's look at that. So this in the second technique, basically what we are saying is that let's forget about the volumes here. So I am going to remove this particular filter, and now we are not worried about volumes. We are not using volumes of the shares being traded to tell us whether the option chains could be active or not, or option chains could have significant volumes or not. Rather, now what we're going to do is we're going to say that uh, the 500 stocks, let's say, which are part of the S&P 500 index, are representative of the best and the biggest companies in their respective sectors. That is why they become part of the index. The way the S&P 500 index or any other index, be it the Dow Jones or any other index, the way they are constructed is that companies which have significant market capitalization, and also companies which are representative of the sectors, particular sectors, they are included in the index, because anybody who's creating an index wants to have a fair representation of the entire market in the index. So the second strategy basically dictates, and it works on the assumption that any stocks or any companies which are part of the indexes are basically going to have active option chains. So we don't need to rely on volumes. What we can do is we can list down all the stocks based on our strategy. So right now you can see that I have listed 36 stocks, and these came out just from the strategy where we basically try to pick up stocks which are trading at a discount. And now I'm going to simply select the index S&P 500. So now out of 36 stocks, only those stocks will be displayed here which are part of the index, which form part of the index. And you can see here that I am basically getting left with 11 stocks. And I think, if I'm not wrong, I don't remember all the stocks name by name, but we got 11 stocks earlier also when we looked at volumes over 2 million. So you can see the correlation that the first technique, going by the volumes of the underlying, yielded the same results. And if we go by the second technique, that we look at only stocks which are part of the index, because if some company is part of the index, then that means that company is really active in terms of its trading volumes, it is representative of its sector, and so it is going to have active option chains. So both the techniques are yielding pretty much the same results. So this is the second technique. And you don't just have to use the S&P 500. The S&P 500 is one index, and the other index available here is the Dow Jones. So now, Dow Jones obviously will have lesser companies, so only one company which is part of the Dow Jones is getting listed here. So S&P 500 is a fairly good index, and you can basically use that to identify companies which are part of the index, and those tend to have really good option volumes. So that's the second technique. Now let's look at the third and the final technique, and that is based again on experience, because when you start trading options over a period of time, you will be having different watch lists, you will have different lists of companies which you will be tracking. So over a period of time, all of us tend to have those Excel sheets where we have list of the most active companies or options that we have traded in the past. So why not use that and basically search based on that list from a set of predefined companies, which companies are actually satisfying our trading strategy today. So as an example, what I'm going to do is you can you can see here that I basically have an Excel sheet where about 500 companies are listed, and this is based on my experience and some of the trades that I have done in the past or watch lists that I have created. And these are basically those companies which have, in my opinion, the most active options. So I'm going to select this entire uh, list of 500 companies, and I'm going to copy paste these stickers over here. So first of all, let's remove the index criteria. So we are no longer using the index criteria to identify stocks. And now what we are doing is I'm going to copy paste the list of these companies here, and I'm going to execute this. So what is going to happen is now the screener is not going to look at all the companies which are available in the market. It is only going to look at these 500 companies that I just keyed in, and it is going to show me those companies or those tickers which are basically satisfying the criteria of my trading strategy. So my trading strategy, the one that I have selected right now, is stocks on sale or trading at a discount. So out of the 500 stocks, there are 9 stocks which are currently satisfying this criteria. So you can again see these names we saw some time back as well. So we were getting 11 results with the prior two techniques. Now we are getting 9 results, and I'm pretty sure these 9 results are a subset of those 11 results. So two companies got dropped further, but more or less we got the same results, because those 500 companies that I selected are the ones which have active option chains. So you can use any of these three techniques, okay? And all of these techniques will yield you pretty good results. The objective is that you have to understand that your trading strategy is a totally different thing, and trading options on stocks is a totally different thing. So the first thing you need to do is to get a list of stocks which satisfy your trading strategy, because options don't have their own pricing. Option pricing is going to be dependent on the pricing of the stock itself. So these are not two things which have to be considered separately. There's no direct filter saying, you know what, these options are great, you should trade these options today. That's not going to happen. If you want to trade options, then you have to understand that the pricing of those options is going to depend on the pricing of the underlying. And it is the stock price movement which will dictate the price movement of the options, not the other way around. It is not that the option pricing will influence the stock price. It is the stock price which will influence the option price. So first of all, you have to analyze the price action of the stocks, apply your strategy, and come up with a list of stocks which satisfy your trading criteria. So in my case, these 9 companies, let's say, satisfy the trading criteria that I want to use. Now for these 9 companies, I want to be certain which of these companies have high option volumes, high option interest. And so I have discussed 3 strategies which you can use to basically get that information. So I'll just quickly recap the 3 strategies. The first one, where we basically filtered for stocks having a very high average daily volume, more than 1 million shares or 2 million shares being traded on a daily basis. The principle being that if the shares have heavy trading volume, then the corresponding options will also be active. And we saw that the results that we got are fairly uniform no matter which strategy we use. The second strategy that we used was that we apply our strategy only to stocks which are part of some index like the Dow Jones or the S&P 500. And the principle involved here is that if a stock or a company is part of an index, then it is pretty much representative of a sector, and those companies tend to have highly active option chains with high volumes and open interest. And the third strategy that we're using is where we are basically keying in our own list. And this is a list which, by experience, which from any other source we know have high option volumes. And then we are applying our strategy to this subset of a list to figure out that, okay, we know for sure this list of 500 stocks have highly active options. Which of these companies today are satisfying my trading criteria? So which of these companies, in my case, the example that I'm taking here, are actually trading at a discount? And then I can basically go in and I can execute option trades on these companies. So just now we have taken a look on the actual Finviz platform at each of these three techniques. I hope the information was clear. So thanks a lot for all your time. And I want to really hear from you. Please leave it down in the comments. Which of these strategies do you find is the most useful, and which of these are you planning to deploy in your options trading? So let me know that in the comments. And as usual, if you have any queries or suggestions, please leave them down in the comments. Please subscribe to the channel. It goes a long way in giving me the proper feedback that these videos are useful to you and helps me basically generate more content for you. And I'll catch up with you guys in the next video. Thank you so much for your time.